Well, let's do a video on natural gas. I wasn't going to do it, but I did say I would, so let's do it quickly and it won't be long. I'm in all sorts of other trades at the moment, but the market's kind of a little quiet, so we've got a little bit of time. I'm just going to refer you to this chart that I put up on Twitter. If you didn't see it, go and have a look at Twitter. I put up most of my ideas and trades there throughout the day on natural gas and various other instruments, including Forex and gold and stocks and so on. This was the chart I put up on Twitter straight away. She touched about 2.03, $2.03. Moved up, broke up through that resistance level with its big bullish candle. After forming a reversal bottom against that area, we broke up through these two moving averages, and I got into the trade immediately on that break. There was an opportunity to get in on the retrace as well. These are the arrows that I had drawn in, and you can see I was actually hoping for a move down so we could reload. I took a 25% position at $2.11. I really wanted to get some more, but that's all we've got for the moment. So what I'm going to do is actually delete these lines and go across to the daily chart to see where we stand. So my position is 25% long at $2.11. And we've just moved up a little bit today after a little gap up over the weekend over there. There's a little bit of negative news over the weekend regarding natural gas, a couple of disruptions in supply, nothing major. But anyway, we gapped up a little bit and we've moved up. And today we've seen quite a lot of volatility, just moves up and down. But let's get off the short-term charts and have a look first of all at the 4-hour chart. This is the NYMEX chart, by the way. I'll switch across to my own broker shortly. These are the levels I've had drawn in all this time. And you can see there's the sort of move up over the weekend, the little gap, and then sideways consolidation, bit of a spike during today, bit of a spike up into those moving averages. That's the 100 and the 50 period moving average on the 4-hour chart and the top of this resistance zone. We haven't actually closed above there, even though we did break up into those moving averages and through the resistance zone. We haven't broken up above there yet. So that's where we stand. Looking pretty good if you're long. Pretty good for me because I'm long, but I don't have enough position on this. I wanted more, but we may not get a turnaround from here and the market might carry on moving up. So with that having been said, let's have a look at the day chart. And you can see how low we are still right down at these bottoms. Really, we haven't moved out of this range. And the range remains between $2 and $3. Bear that in mind. And we could stay stuck in this range for a pretty long time. We're still right near the bottom of the range, so there might still be buying opportunities at around about $2 and perhaps even lower at $1.80 and $1.50, where I'd actually like to get some opportunities to buy, which we might not get. So there we are at the moment. There's the 20-day moving average. Always a good indicator to look at. If we're above the 20-day moving average in general across all instruments that you might be trading, it's kind of bullish in the short term. And if we're below, it's kind of bearish in the short term. So right now we have to still say that we're not quite bullish just yet. Even though we did have a piercing candle pattern on Friday, the little gap up over the weekend and this move higher, that's a pretty bullish candlestick pattern, but we still haven't broken above that resistance level. Up above us, we've got this level here between $2.30 and $2.50, 60, somewhere around there, where we had that previous spike high. And that's the first barrier to overcome until we get up into this next green zone at around $2.61, and then the $3 level, which we may struggle to get through actually, because even though my target's at $3.40, 50, 60, or 75, I think $3 is going to be a formidable boundary to get through. Let's switch across to my broker chart, the black bull chart. And on here, I've got the Fibonacci levels drawn in. And you can see once again how these fib levels coincide very beautifully with the levels that I had drawn in on the NYMEX chart. And those levels are almost perfectly aligned with the Fibonacci levels. So there we go. We've actually broken up above the 78.6% level, which is good. There's the 20-day moving average, which we're still failing at on both charts. And we've got the 50-day above us, and then this resistance line here, which is at the 61.8% Fibonacci level. Remember, these Fibonacci levels are in reverse because we're going back the other way now. So what can I say on natural gas, really, apart from that I'm long from $2.11. I'd like to have a bigger size position on this, but I don't have. And whether we'll get a dip back down towards $2, $1.80, $1.50 or not, I really have no idea. So we're in the right trade, we're in the right direction, but not enough size. And we'll have to wait to see whether we get the opportunity to add some more to that. If you're not in natural gas yet and you want to be long, you might have to wait for further dips back down to $2.11 where I got in and perhaps try to add some positions on there. But I wouldn't go full size until we get back down to maybe $2, $1.80 or $1.50. And we're still not cleared from these lows by any means just yet. So don't get me wrong, I'm not bullish on natural gas at all at the moment. I'm just trading off the probabilities that we may have formed a bottom at around about $2, considering that this dip on Friday got to almost $2, not quite, but we got to $2.03 before moving upwards and then gapping up over the weekend. I think the next stop will be $2.36 to 40, and then maybe we'll get up to $2.50, and then maybe up to $2.61, and that might not take very much time at all. If we don't manage to rally up through there, then expect some further dips back down to retest $2 and then below that. Having said all of that, though, we now have something like a triple bottom. And I don't know if you were trading gold a few months ago when gold formed a very similar pattern with a triple bottom, and it looked very much like this. So there's the first bottom, there's the second one, although it was sort of bottoms within a bottom. It was a broad bottom there. And then here's the third one, which didn't quite get down to $2, but got pretty close. So maybe we've got the basis for a triple bottom here and a rally back up to probably $2.60, and then eventually up to $3, where I think we're going to struggle. And then if we do get through $3 eventually, up into $3.40, 50, 60, or 75, somewhere in this region. And a rough target for that sort of exit would be around $3.50. Bear in mind, there is still a lot of long hands holding on to positions from $3.50, potentially even higher, but certainly $3, $2.50, $2.20, $2.30 in that region. There is still a lot of people holding on to those positions, and they haven't let go of them. I did go through in one of the previous videos about how people may have structured their trading around this movement that we've seen recently, and I'll put a link to that video at the end of this channel. So that's all I've got to say on natural gas, and we'll have to see how this progresses, but we are in a position, a small position long, and that may be all I manage to get out of this trade at the end of the day if we carry on moving higher, or I might get a chance to add if we drop back down again. I put another video up earlier today, which I'm also going to link at the end of this one, about trading videos on YouTube in general, and whether you should take the advice of those videos and what to do with all the advice you get on natural gas and Forex and gold and stocks and all that sort of thing, to which I'll post the link at the end of this one as well. If you enjoy this video, please give it a thumbs up, and if you're new to the channel, why not subscribe to make sure you get all the updates as they come out. Take care.